All right, when most investors think of the carry trade, they think of the Japanese yen, but the falling dollar is expected to keep falling, pushing the greenback to the center of the carry trade. This means that global investors are increasingly borrowing dollars to fund higher-yielding currencies and assets like stocks, commodities, and emerging markets. Is this necessarily a bad thing? Does it mean the dollar is the new yen? Here for a street fight, Brian Dolan, Chief Currency Strategist with Forex.com, and Peter Schiff, President of Euro-Pacific Capital, now running for a Senate seat in Connecticut, and Peter never met a greenback he liked. Also the author of Crash Proof 2.0, How to Profit from the Economic Collapse. Peter, oh, wait a minute. Brian, where are you?
In Bedminster.
Bedminster, New Jersey.
Yep.
And Peter, you're in Connecticut?
Absolutely. Yep.
Okay,
Stanford.
First word goes to Brian, farthest west. Brian, is the dollar the new yen? Are we going to be the carry trade carrier?
For the time being, it is. U.S. short rates are very, very low. They briefly dipped below Japanese rates last week. So the dollar is extremely cheap to borrow in, and for that reason, it is a funding currency for the risk trades. And I don't expect that to really turn around materially until sometime middle of 2010, when the Fed begins to indicate that it's going to move to a tighter policy.
And Peter, I assume you don't think the dollar will strengthen until sometime in the next millennium.
Well, I don't know when it's going to strengthen, but, you know, the dollar's not the new yen. Unfortunately, it's the new peso. But, you know, from the perspective of being a funding currency for carry trades, absolutely. You know, the yen carry trade is over. You know, the new Japanese government is actually talking about the benefits of a strong yen for the domestic economy. The rate differentials that were keeping the yen in check are not there. The yen is going a lot higher. But the dollar is going to go a lot lower, which makes it ideal. Not only can you borrow dollars very cheap and earn a carry by investing in higher-yielding assets, but the dollar is going to fall sharply. So anybody who puts on the carry trade is going to make a ton of money. And now the Federal Reserve is in a box. Either they're going to supply the carry traders with an endless amount of cheap dollars to borrow, or they're going to put an end to this trade and aggressively raise interest rates and bring on a much more severe recession than anything we've experienced so far.
At the same time, Brian, I mean, isn't it a foregone conclusion, essentially, that the government will not allow the U.S. dollar to become the new peso simply because that would be so detrimental to our trading partners, people like China, who have their reserves in dollars?
That's exactly right. And so the U.S. is very interested in supporting the dollar. They're not going to let it fall out of control. And I believe the G20 also is on board for that, and we would expect concerted intervention if the dollar did begin to weaken significantly. You have to remember the U.S. has a significant amount of borrowing left to do, and they're not going to be able to do that if the dollar is falling precipitously.
Well, we can't do all this borrowing. That's the point. We have to stop. You know, a weak dollar is bad for Americans. It's not something that our trading partners have to worry about. They're going to be fine. It's Americans who are going to be stuck with a depreciated currency.
Their currency strength is undercutting their own recoveries, and they've all been extremely vocal about that. So that's the other reason. And
all right, gentlemen, I'm going to blow the whistle right here because let's agree to disagree at this point. Let's get to the trades. What sort of trades do you fashion based on your respective investment theses? Brian.
Sure. Right now, I think the risk trade is probably making a medium-term top. The dollar is making a medium-term bottom. I prefer to be a dollar buyer at this point. But then down the road, I'm going to look to reestablish the commodity trades, buying Aussie dollar back a little bit lower around the 77 to 80 cent area, buying the Canadian dollar when that's back around the 113 to 115 against the U.S. dollar.
And Peter?
Well, look, I already own those currencies. I own a lot of Japanese yen. In fact, I think the Japanese yen is just breaking out. I think the chart looks fantastic. I wouldn't be looking for any significant pullbacks in these currencies. If they come, sure, buy them with both hands. But I think there's a much better chance that the dollar drops through a trap door here. I think there's a lot of air beneath the market.
Peter?
Excuse me?
Are you shorting the dollar?
Well, I've been shorting the dollar for years.
Okay.
I do it because I own foreign currencies, I own precious metals, I own foreign stocks. Unfortunately, the dollar is a fatally flawed currency.
All right, Peter, we know that. Gold at 1,000, buy it or just hold it?
Well, buy it, hold it, you know, accumulate it, buy silver. In terms of U.S. dollars, gold is going a lot higher. We're still early in this bull market on gold. Have you bought any gold yet, Mark? Come on, you can buy it. There's no policy at CNBC says you can't buy gold.
That's true. I could buy gold, yeah.
All right, call
Brian,
me up.
Brian.
I'll get you some.
Will you give me a discount?
Well, I can't give you a discount.
Oh, well,
but,
then forget it.
But the price is going to go up. It's a discount no matter what.
All right, Peter, thanks. Good to talk to you. Brian, same thing. Good to talk to you.
Thank you.
All right, so straight ahead.